Ladies and gentlemen, you have been connected to the Nila Infrastructure Limited December 2020 result discussion conference call. Please stay connected. This call will begin shortly. Thank you. Ladies and gentlemen, good day and welcome to the conference call with Nila Infrastructure Limited December 2020 result discussion hosted by Valorum Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorum Advisors. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a warm welcome to you all. My name is Anuj Sonpal from Valorum Advisors. We represent the investor relations of Nila Infrastructure Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the third quarter of financial year 2021. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's con call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. I would now introduce you to the management participating with us in today's earnings conference call and give it over to them for their opening remarks. We have with us Mr. D. Badodia, Chief Operating Officer, Mr. Prashant Sarkedi, Chief Financial Officer, and Mr. Himanshu Bhavishi, Group President. Without any further delay, I request Mr. D. Badodia to give his opening remarks. And over to you, sir.
Good afternoon, friends. I welcome you all to the earnings call for the third quarter of financial year 2021. This quarter has been a quarter of comeback post-COVID-19, with availability of labor clear, not marred by lockdowns or monsoon. Execution has continued to increase from the September levels and crossed pre-COVID levels post-Diwali in December. Though our overall financials for this financial year have been restrained as a result of COVID-19 induced disorder, the government bodies have also started functioning almost fully with priority to abate the spread of COVID-19. Looking ahead, the social housing segment is set to chart a new chapter of growth fueled by affordability, reinforced desire to own a house, and renewed interest from all stakeholders. During this quarter, we have added two meaningful and strategic orders aggregating to amount 883.3 million of slum rehabilitation and redevelopment for Ahmedabad Municipal Corporation. These would address the needs of permanent housing for 810 slum dwellers in approximately 24 months. We believe that in fact the engagement in the civic urban infrastructure segment adhere to stipulated cost, quality and time puts us in a good position to capture plentiful growth opportunities. The continued pickup in the economic activity and forward-looking union budget has reset the tone for the growth. With the launch of nationwide vaccination drive, we hope this is the last stage of the fight against COVID-19. Several high-frequency indicators such as GST collection, rural unemployment data, rail freight revenues, power consumption, e-way bill generation, electronic toll collection, economic activity has crossed pre-COVID levels. These trends should also reflect in our business and results as we continue to think big and grow our business by staying focused on endless possibilities. Now coming to our order book, on April 1st, 2020, the company had an unexecuted order book of 5,345 million. During the quarter 3 FY21, AMC has awarded 2 orders of PPP basis under Pre-Development of Public Housing Scheme 2016 of integrated group housing facility along with common amenities, infrastructure and development works of the site. Kokra Old Slum Quarter with estimated development cost of 500.5 million rupees for construction of 448 dwelling units and 14 shops, and India Colony, which is Vijay with estimated development cost of rupees 382.8 million rupees for construction of 348 dwelling units. While EMC has cancelled to pursue the PPP project pertaining to integrated slum development project in Kankuni Chali Stadium, Ahmedabad, under urban development and urban housing development. The company has reduced the order book to that extent. Further, in line with the ethos of good corporate governance, ethical practices, fairness and transparency, the order book is prudently reduced and realigned to depict the actual revenue potential. At January 1st, 2021, the company has confirmed an executed order book of 4,690 million. With this, I now invite Mr. Sarkeri, our CFO, to discuss the key financial and operating highlights for the quarter under review.
Thank you, Mr. Vadagaria, and good afternoon, friends. I will quickly take you through our financial and operational highlights for the quarter ending 1st December 2020. In terms of the first quarter performance, the company could not generate a meaningful revenue due to the COVID-induced lockdown as well as the reverse migration of the laborers and heavy monsoon. During the quarter 3 FY21, the standalone total revenue of the company 377 million rupees, higher by 119 million to quarter 2 FY21, 258.7 million, while it was 639.3 million during the quarter 3 of financial year FY20. Profitability at EBITDA level has been restated 39.3 million, that is higher by 47.5 million to quarter 2 FY21, negative profit of 8.1 million. The company has booked profit of 19.3 million, that is higher by 40.5 million, quarter 2 FY21, negative profit of 21.2 million. For 9 months FY21, the total revenue of the company 727 million rupees, while it was 1,745.2 million for the corresponding period of FY20. On the profitability front, the EBITDA for the 9 months FY21 is negligible at 1.3 million, which also wraps up a negative profit of first half FY21. The company has been able to reduce the negative profit and contain it 38.5 million for 9 months FY21. At the December 31st, 2020, the standalone net worth of the company 1,394.8 million and standalone gross debt 1,440.6 million, while the cash and bank balances on the standalone basis 52.7 million rupees. The net debt to net worth computes 1.08. It may be noted that the profitability is restored to the positive level from the EBITDA level, though it is marginally mainly due to the cessation of the income during the first half of FY21. While the overheads were being because an increment in certain project operation costs toward the projects that are preliminary stages. The depreciation has remained constant as there is no increment in the PPE. The finance cost increased for the financial year 21, quarter 3 FY21 due to the higher utilization of the fund-based limits, while it has been reduced for 9 months FY21 as a result of the reduction in weighted average debt cost. The company has honored all its financial obligations and retained from the prevailing the benefits of the moratorium under the Reserve Bank of India COVID-19 regulatory package, except for holding the reduction in SBI DLOD limit, wherein the utilization was well below the stipulated drawing power. On the back of loss, the net worth of the company has reduced by 38.5 million to 1,394.8 million. The total debt of the company increased to 1,440 million rupees. The net debt to net worth computes 1.08. The company's account is standard with all the lenders. In terms of the 9 months performance, consolidated revenue of the company stood at 596 million, down from 1,650 million as compared to the corresponding period of the previous year. On the profitability front, operating EBITDA for the 9 months FY21 has witnessed a loss of 53 million. I now open the floor for question and answers that may be required for the clarification. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We would like to remind participants that you may press star 1 to ask a question. The first question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. So, sir, our execution has improved QOQ, but on a broader basis, when do you see the overall rate coming back to the pre-COVID levels? Any broader idea will be helpful.
From this quarter, we've started, I just opened up the call on that note that from December, things are normal. So we're expecting this quarter that we're sitting on right now, which is the last quarter of the financial year, to be back to absolute pre-COVID levels.
And sir, labor situation is normal?
Yeah, absolutely. Post-December, we have no issues with labor. The labor availability is back in full swing.
Okay. And sir, last quarter...
I would request you to speak a bit louder, sir. Your voice is not audible.
Hello. In last quarter, you had given up some of the projects, I guess. So can you elaborate a bit on that, sir? I'm not fully clear on that one.
So we'd already come out and said there were 2 orders that we had given up because government had scrapped those orders. We were L1, but government's priorities have changed. So there was one order of modernizing the old vegetable market here in walled city of Ahmedabad, and there was one more order which government had scrapped off. So we had downsized the order book to that extent. More than the order book, it was the pipeline order book that we're talking about, because these are 2 orders where we were L1 and those orders were scrapped. And similarly, in this quarter, there's one PPP project which we were already allocated, and they have withdrawn that cash. So it has been written off from from the order book.
Sir, any further orders you see potentially to be given up, any possibility?
No. All the orders that we are talking about now are already under execution or are in process of starting execution. There are no orders where we are expecting any government delay or government to act differently, because we've already moved further ahead in most of these unexecuted order book projects where government has already facilitated whatever processes that they had to facilitate. So I from the current order book, there is no order which we think is going to get affected any further.
Okay. And one last question. Any update on the logistics part?
Well, yes, updates are we are talking to a couple of our existing clients for their expansion plans later this year, for which we are in. And the general demand seems to have returned sometime in post Diwali. So the demand has picked up, which is a great sign, because we're sitting. But we are also waiting. We are not somebody who has already created speculative assets and they are waiting for tenants. So we are in much better position. But the overall demand for build-to-suit facilities has increased, and government work on the other land parcel has started as per which we own inside the SIR, which is where things have not really moved for a very long time. But now finally there's some progress from the government. So we're very hopeful that in another couple of quarters we will start seeing some action coming in from there as well.
Okay, so that was helpful. Thank you. Okay. That's all from my side.
Thank you. We would like to remind participants that you may press star 1 to ask a question. Reminder to the participants, anyone who wishes to ask a question, please press star and 1 at this time. The next question is from the line of Mahesh Jain, an individual investor. Please go ahead.
Hi, good afternoon, everyone. Thank you for taking my question. So my first question is, out of our total new projects, what are the numbers for which we have received the approvals, and how many projects are still there under the approvals from the government, and also if we have the appropriate funding for these types of upcoming projects?
To answer question 1 first, we have received all approvals from all of these unexecuted projects that we're talking about, and there is no approval which is pending from the government on any of these counts. As far as servicing these orders and the capital is concerned, we don't envisage requirement of any further capital than what we already have to service all the unexecuted order books in the book.
Okay. And the second question is, so referring to the last con call, there was one order cancellation in Dholera Smart City project, so which was due to some changes in design from their end. So in comparison to it, is there any order cancellation in this quarter?
I already stated in the opening speech, there was one small order on the PPP. We had won 5 slums, out of which one slum the government has cancelled it because they have some disputes on the ground with the slum dwellers. So that is not going ahead. That we have already written off, but that amount is pretty small. I will have to check the amount with the team, but that's a pretty small amount. Apart from that, there is no other order that we've written.
Okay. And my final question is, as I see you are largely focused more on government-based orders and very selected private entity orders. So what is the main reason for it? So it is because of the margins, or what it is related to?
It is because of comfort of working. We have said on multiple calls since a very long time is that we tend to invest our focus into the funding models of the project rather than the project in general. This is true for majority of the projects that we do. So when we do EPC projects for affordable housing for the government, we are very clear on the funding pattern that funding is not really coming in from the civic bodies that we are getting associated with. They are merely a facilitator. So we believe in that funding pattern that really keeps our cash flows pretty smooth, and that's the precise purpose we focus on that. And when we talk about slum rehabilitation projects, there is no literal exchange of money because we get TDR and we get land in some of the projects, and we are supposed to be funding our own project. And now, as we have a lot of experience in developing all of these slums, we are pretty confident of the way that we deliver and to balance out the cash flows, even though the initial requirement of cash flows in such projects is a bit higher than EPC projects, but obviously then risk-reward ratio is also higher. So yeah, there will be my answer to your question.
So it's just a follow-up question. In your slum rehabilitation project, you were stuck in those projects as there was some restriction from the government not to move the people due to this COVID restriction. So what is the current situation on that right now?
So that was obviously a larger picture. At that point of time, government had not given us the clearances to go ahead. Now they have given clearances. So we have already activated our teams on the ground, and they are in process of finishing the documentation, because there is a very rigid documentation policy of the civic body before we can remove anyone or till they can claim a house. So there are multiple issues on the ground which need to be sorted out. So on all the projects, the work is already on as soon as the government gave us the clearance to do so. And usually, depending on the size of the slum, it sort of takes that much time before we can start moving out, because we don't start moving out people unless we are through with the entire land parcel, because then it becomes pretty much of a issue or a negotiation setback for you as well. So we'll start moving out people pretty soon on one or two of the smaller slums, but the other ones could take a little longer before we start moving them out. But the process has already been started, so matter of time.
Okay. Thank you. That was my final question. Yeah. Okay. Thank you.
Thank you. The next question is from the line of Rahul Chaudhary, an individual investor. Please go ahead.
Thank you for the opportunity, and good to see the business getting revived now. Just a couple of things. One was that on a lot of orders which have just started off the execution. Also, what will be the execution time period for these new orders?
So largely, Rahul, we look at execution timeline of most of our orders would be within 24 months. Let's just assume maybe 26 months if we add these snagging. But usually all of these contracts, the general mean average of most of our contracts will be 2 years, unless it's a much larger project. But most of the projects that are sitting in the unexecuted order book are largely 2-year timeline projects, apart from 2-3 larger projects which will have longer timelines than those.
Right. And also on the order front, right, how do you see the order inflow now and, looking forward for the next year, right, now that the COVID is hopefully coming to an end and things have started getting normalized? So how do you look at the general industry, and how do you look at, bagging orders going ahead?
The order situation is looking pretty good. We are eyeing a lot of bids which are coming out largely on the PPP segment. Much before COVID came in, obviously we were adjusting the way that we look at business and adding more PPP orders in comparison to EPC. I think it just cemented our position that we are heading in the right direction. Because the COVID had pretty much a situation for most of our EPC orders because of cost overrun, not because the government is not going to give us the extensions, but just in general with slim, very slim profitability. There's a lot of risk which definitely is involved. So unless the profitability is of some threshold level, we had not pushed too much on the EPC contracts and focused our attention on more public-private partnerships where we are comfortable. So that's where we are focusing on right now. While we will continue to do a lot of EPC stuff, but these will be targeted projects where we think that the profitability is going to match our parameters. So I think if you're asking me in general the industry situation, then I think it's all back to normal. Obviously, the budget reinstating a lot of focus again on infrastructure, so we see no and plus on the affordable housing as well. So both of these sectors that we are involved in, it's really going to the opportunity is not really going to be a problem, we believe.
And also, looking back at the previous concord, I think you remember you mentioning that, you would be looking at eyeing at different states as well, right? Just wanted to check that now would we again start looking at diversifying the different states, because currently it's just Gujarat and Rajasthan where predominantly we're present in.
Yes, we see, as I've been saying on multiple number of calls, we are actively looking at some states where we think it's feasible to work. But again, there's no underlying pressure that we need to scale up in terms of demography, because there is no benefit of scale that now you get unless, you getting you proving scalability on the demographic front really proves nothing. We are rather focusing on diversifying in multiple areas, like we did Badmer Medical College for now. Education and medical fields have opened up for us. So yes, some concentrated avenues to be opened, but we are not focusing too much on diversification just on the terms of demography, while we continue to view some states very closely. But as I said and have been saying on multiple calls, unless it's going to make a meaningful order book meaningful change to our order book, we are not looking at exploring new demographies for single projects of amounts that we are already dealing in. And when we see that the comfort is pretty much there, the team is obviously pretty much here. It's our home state. Opportunities are plenty. So is the case in Rajasthan. So might just as well on there and so keep an eye on something meaningful that's happening in the other states.
And how do you look at the competition scenario, within Gujarat and Rajasthan right now because of COVID? A lot of smaller scales would get impacted. So would that be an opportunity coming across for you guys?
Definitely there will be opportunity coming about, because being organized and having your all the other financial positions in place that includes guarantees, bank guarantees. It's definitely been a very challenging time for at least most of the infra players, the smaller ones at least. So going forward, let's see how they catch up. But yes, gives us the competitive edge, while our competitors and their segments are completely different on the different segments that we work with. But in general, if your question is pertaining to how the smaller companies have been impacted, they have been impacted a lot, and while they must be coming back to ground. But let's see how quickly they can gain that.
Right. And I think this is the last question. I think this one is a bit of a bookkeeping kind of a thing. What will be the kind of bank guarantees available with us, and what is the kind of with what we can do with that kind of bank guarantees?
Prashant, this can help me with this one first.
The company has utilized approximately 57% of their bank limit as on 31st December 2020.
Okay.
Having the availability of approximately 20 plus crore rupees. With the availability of this bank guarantee, company can approximately bid for more than 800 crores of projects. Sufficient for bank guarantee.
Okay. Thank you, sir, and all the best for the coming quarters.
Thank you.
Thank you.
Thank you. The next question is from the line of Sanjay Bhaviskar, an individual investor. Please go ahead.
Hi, good afternoon. So in Bichara G, have you sold anything in this financial year? How are the inquiries looking like?
As I just previously answered, the inquiries are looking good now. We're talking some expansion plans with a couple of our clients, and the new inquiries have also started coming in. But a lot of these inquiries take a lot of time to close, actually, depending on the organizations that we're talking about. But in this financial year, no, we've not sold anything at Bichara.
So as of FY22, what kind of projections are we looking at then, like overall the business?
Well, it's too early. Honestly, it's too early for us to look at it in terms of monetization of that, because that's not the immediate plan at this point. But yes, if the opportunity is right, we would want to monetize a lot of it. Apart from that, we usually set targets in terms of having more land in use. So as I said, one fraction of the land or more than 50% of the land which lies under the SIR, because most of the land is not motorable now. It's going to be motorable with government roads opening up, or the process of government roads which have already started. So monetizing them is going to be much easier for us. So that segment already opens up for projection in the next year, where we're already working on things that we can do. Too early to talk about them at this point. And the other part on the logistic part, as I said, we're not under any underlying pressure. Obviously, there is real estate appreciation. That's not the goal, but that's obviously there at the back of the mind. We would have been under tremendous pressure if we would have been sitting on an inventory which is speculative in nature, where we've already built up warehouses thinking that the demand is going to come, and then demand has not come. So we are focusing our energies on a lot of build-to-suit requirements which are going to come. And let's just face it, before COVID as well, the quarter before that was a dismal quarter for four-wheelers in the country, and even Suzuki and stuff, where Suzuki, even being the largest one, was not looking very comfortable. Obviously, their production facility is not directly linked to the sales in India, but still the mood is pretty much there. So it's been a washout sort of a year, but we're happy to see the auto sales as well. The production is already scaled up since many months to more than pre-COVID levels actually. So Suzuki is looking very confident. So we're definitely holding on. We've been holding on to this for a little long now, but things are moving now, so definitely in the right direction.
Right. So just a couple of follow-ups. So what would be the main focus in the type of projects, that are coming in, next year? And is the company planning to increase its pie on projects with private players?
No, actually we are not, because the precise purpose why we came out of private players is because private players are also in the end, linked. There is money for the private players, which is also coming in from someone. So while it's some white label company we might work with, like we've worked with Adani in the past, and it's been one of the only private companies that we've been working with in the last half a decade or so. But yes, look at those sort of things, but it's not area of interest. We are largely interested in sticking to the government, and where cash flows are completely secured, and we are not really concerned about it.
But in times like COVID, are you not seeing with payments from the government or slow down?
No. So that's exactly what I was trying to say on the previous question, when I said that we invest into models rather than investing onto the project. So we are very confident, like on the slum rehabilitation model, there is no money that's to be exchanged from the government, so we're not worried at all. We can create our own ecosystem in terms of the payments that we have to make and the overall cash flows. And on the affordable front, as I said, the government is merely a facilitator. There's a state government subsidy, there's a central government subsidy. It can affiliate because of COVID, and the state government subsidy will probably come 2 months later, but that's a very small part of my payment. And the beneficiary is affected in the COVID times, which if you put across as a point, I might agree with you, but they have a lot of waiting people in line if people default on payment. So we are pretty confident on the payment structures rather than talking about specific projects. So all the projects that we are working on, most of the projects are with clear funding patterns where the funding sources are clear, and we are very confident about how the cycle is going to be.
All right. Thank you. That's about it from my side.
Thank you. We would like to remind participants that you may press star 1 to ask a question. Reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time. As there are no further questions, I would now like to hand the conference over to Mr. Deep Badodria for closing comments.
Thank you, friend, for joining us today. Going forward, we will continue on the growth path. We will look forward to having you with us on the next quarter's call. In the meanwhile, our team and our IR team will be more than happy to assist you. Thank you again. Thank you.
Thank you. On behalf of Valorem Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.